Welcome to the stream. What up, and welcome. Oh yeah. Got a new chair. I got actually a chair with back support. Like, it's an old chair, but it's a new chair to me. Anyways. Hi, what up, YouTube? And everybody on the stream. Look, check it out. I'm walking at another red flag why we keep exposing Micheal Saylor. Now, I just watched the video of Saylor. Going over the 21 ways to wealth. And I'm going to go over that as one is watching this. I already watched this. I'm watching it again because I wanted to react to it. You know what I'm saying? So let's get into it.
Before I get started, I want to give you a heads up. This video might challenge some of your beliefs, especially if you've been following Micheal Saylor or if you've bought into the narrative that MicroStrategy is Bitcoin's biggest ally. You might feel confused, frustrated, maybe even a little betrayed.
And look, I ain't gonna lie. Like, I was a little like, what's going on, bro? Because I'm just dipping my toes into this space, like heavily, like getting knowledge.
And that's okay. We're not here to cancel anyone. We're not here to create drama. We're here to ask important questions and back them up with facts. Over the many years, we've watched this industry evolve. We've seen people fall victim to the same mistakes again and again, trusting personalities over principles, hype over history, and it's cost them. Sometimes it's cost them everything. So this video is meant to help you think critically, especially about the people and companies who...
Hold on, I missed something. What is she saying?
This industry evolve. We've seen people fall victim to this.
I'm just reacting about Bitcoin right now. I am going to be playing Path of Exile 2 if that's what you came for.
Same mistakes again and again, trusting personalities over principles, hype over history, and it's cost them. Sometimes it's cost them everything. So this video is meant to help you think critically, especially about the people and companies who claim to represent Bitcoin, because as much as we love this space, it is not immune to manipulation, ego, or greed. So if you find yourself feeling uncomfortable as we go through this, I want to invite you to lean into that and ask why. And remember,
I ain't gonna lie, you're kind of messing up my video right now. He's doing some awful things that are against Bitcoin, actually.
Bitcoin was not built to make billionaires richer. It was built to give individuals more control. So let's start with something that should set off alarm bells for anyone who understands Bitcoin's core principles. And that's Micheal Saylor's open rejection of self-custody. In October 2024 on...
Which is weird because, see, like I said, I just watched a video of him going over 21 ways to, like, gain generational wealth, right? And so, like, it's very interesting, right? So the self-custody thing, right? Well, I'll let her finish.
Madison podcast. Saylor said that investors are better off trusting Bitcoin in state or institutional custody rather than holding their own private.
Which is a bad idea. You do not want the state or institutions to hold your Bitcoin. You want to own your own Bitcoin. You want to be the only one in control of your Bitcoin. So I'm saying you don't want anyone messing with your Bitcoin. That's a founding principle of Bitcoin.
Private keys. He even dismissed self-custody businesses as BS salesmen. That's not just a casual opinion. That's a direct attack on the very foundation of Bitcoin's ethos. Bitcoin was created to eliminate the need for trusted third parties. Read the white paper. The entire idea is rooted in personal sovereignty, censorship resistance, and the power of...
That's the only reason why I'm getting into Bitcoin now. Because it's looking to be something that can outpace the mental system of control.
not your keys, not your coins. When Saylor promotes the idea that people should let institutions hold their Bitcoin for them, he's not just misunderstanding the mission, he is actively undermining it. And it's not a coincidence. By discouraging self-custody and promoting custodial solutions, Saylor makes Master more appealing to retail and institutional investors who want Bitcoin exposure without the burden of custody. This drives demand for MicroStrategy stock. It reinforces the idea that Master.
Right. And the interesting thing is, see, I was thinking about investing into MicroStrategy stock because it holds so much Bitcoin. But now I'm not thinking I don't want to do that. I don't think I want to do that. I'd rather just take that money and invest it in a Bitcoin or something else like Sol or Ethereum or something like that.
Is the safe, convenient way to participate in Bitcoin's upside. Price speculation, while ceding control to institutions and boosting the company's share price. So let's be clear, there's nothing wrong with offering custodial options, but to attack self-custody outright while profiting from the narrative that Bitcoin is freedom is deeply dishonest.
Yeah, like, you see, that's what I'm saying. I just watched a video. It was like an hour-long video of him going over like all these different ways to become wealthy and da-da-da-da, right? And it was very inspirational and very inspiring, right? Like, no joke. Like, he can speak very well, right? I give him that. It's just, it's very interesting that now, like, see, I seek truth that goes for everyone, right? So no matter what I'm looking at, bro, truth that is got to be for everyone will eventually come to me. And see, I started watching this guy. I didn't even hear of him before. And then I started watching his stuff. And like, that was maybe a week ago I found about this guy. And within a week, bro, I found a video exposing him for some crazy shit.
And it won't be the last time that we see this contradiction. Now let's talk about MicroStrategy's playbook, the one that's helped push its stock up more than 2,400% since 2020.
Look at that chart, bro. Like, look how crazy that is, bro. 1999 to 2001. Right? Oh, wow. Isn't that interesting, bro? So, their stock had a major spike right before 9/11 and dipped right back down right as 9/11 was happening. That's crazy. And then, like, just the last, like, look at that chart, bro. Like, that's crazy gains. Now, look, think of it this way. In this chart, it shows that, like, if the stock goes up and then you dilute the stock and use the stock to buy more Bitcoin, you're basically running a semi-Ponzi
and why
scheme.
it's built on a contradiction that should matter to anyone who actually understands Bitcoin. Since adopting Bitcoin as its treasury reserve asset, MicroStrategy has issued a staggering amount of new equity and convertible notes to fund these purchases. As of April of 2025, over $18.6 billion of a $21 billion at the market offering has already been used to buy Bitcoin. That's not a rounding error. That is aggressive financial engineering. Take the week of May 12th through the 18th in 2025. In just a few days, MicroStrategy sold 1.7 million master shares and over 620,000 Stark shares to fund a $765 million Bitcoin acquisition. Moves like this have significantly diluted shareholders. Saylor's own voting power dropped to 45% by late 2024, down from the majority control he previously held. Now here's the problem. Bitcoin is built on scarcity, on a fixed supply that cannot be inflated. Right. There will only ever be 21 million coins. That's part of what makes it valuable. So when MicroStrategy dilutes its shares in order to accumulate more Bitcoin, it's engaging in the very behavior that Bitcoin was created to eliminate. Issuing new stock to print money and buy a harder asset, that's not decentralization. That's fiat behavior wearing a Bitcoin t-shirt. To be fair, it's worked for now. By issuing shares at a premium to their net asset value, Strategy has been able to ride waves of Bitcoin enthusiasm, raise funds, buy more Bitcoin, and pump its own stock. And then because it's pumping its own stock, it's making it able to buy more Bitcoin. As the Bitcoin purchases drive headlines and price action, it creates a feedback loop that keeps the flywheel spinning. But there is risk beneath the surface, as some users on X or Twitter have pointed out, including CinematorX and On Torrent 4, this strategy pushes up the company's average cost basis. By May 2025, it's already around $69,979 per Bitcoin. That means shareholders are exposed to serious downside if Bitcoin's price drops, even temporarily. So while the stock might look strong, the risk profile is getting steeper with every new purchase. Now, in the end, this isn't a celebration of Bitcoin's core values. It's a financial maneuver that uses Bitcoin's narrative to inflate a corporate asset. And
right, see, look, that's what he was trying to say in the wealth thing. He's like, you want to be, even if you're an individual, you want to become an LLC. So basically, he's trying to get everyone to become a company. A corporation is a dead entity. So now I'm really rethinking that, and I think I'm just going to save my Bitcoin and invest in other manners that keeps me as an individual. I want nothing to do with the government.
shifts the risk onto the very people who believe in Bitcoin the most. So let's keep pulling back the curtain because it's not just about dilution. Micheal Saylor and MicroStrategy have also leaned heavily into debt to fund their Bitcoin strategy, and not just a little bit of leverage. We're talking billions. Over the past few years, Strategy has raised capital through convertible notes and newly issued preferred stock like STRF and STRK in 2024.
Right. So if they're diluting their stock and selling it off to make more money through debt fiat currency, they're using debt to fuel their ability to buy Bitcoin, and Bitcoin is finite. But in actuality, I'm pretty sure that's what everyone's doing or going to be doing at some point. They're just the biggest and largest and first to do it.
They announced a plan called 4242, aiming to raise $84 billion, half through debt, half through equity. That number should make you pause. Back in March of 2023, Strategy repaid a $205 million Silvergate loan at a discount. A savvy move, sure. But by 2024 and into 2025, they were issuing new securities again, raising $711 million through STRF stock alone to buy more Bitcoin. So let's not sugarcoat this. Saylor has turned Master into a highly leveraged vehicle to acquire Bitcoin. Now, if you're just chasing returns, this might sound clever. More leverage is more upside, right? But this is where the mask slips. Bitcoin was built to offer an escape from the risks of centralized debt-based systems. It was designed to eliminate counterparty risk, to empower individuals, not mimic the playbook of Wall Street investment banks. And yet here we have Saylor, the loudest pro-Bitcoin voice in the room, using all the old tools of centralized finance. Debt issuance, convertible notes, and financial engineering. This is not sovereignty, it's speculation. And it's working for now. Strategy's leveraged approach has turned Master into a high beta proxy for Bitcoin. In 2024 alone, the stock rose 91%, well beyond Bitcoin's own gains. Now that is appealing to momentum traders and institutions looking for amplified exposure. The stock often trades at a steep premium to its net asset value, reflecting investor confidence in this leveraged model. But confidence can flip. Analysts like Quinn Thompson have warned that if interest expenses rise or if the market cools, MicroStrategy may be forced to issue even more shares just to service its debt. That sounds like debt monetization to me. That's not just dilution,
right, that's like
a structural risk. And it turns Bitcoin, a long-term hedge against fiat collapse, into a short-term gamble on market sentiment. So again, we're not seeing a company championing Bitcoin's ethos. We're watching a corporation use Bitcoin as collateral in a leveraged financial structure and hoping the music doesn't stop. So now let's talk about transparency, or the lack of it. By May 2025, MicroStrategy claimed to hold over 576,000 Bitcoin. That's more than 2.7% of the total supply. And yet, when asked...
And you gotta think, that's nothing. That's like nothing compared to how much Bitcoin there is, but like, still it's a lot. 2.7%.
to provide on-chain proof of those reserves, Saylor refused. Let that sink in.
But Saylor says on-chain proof of reserves a bad idea due to security risks. That's the whole point of Bitcoin, is to make sure you can't hide your shit.
In a system built on the principle of don't trust, verify, the loudest voice in the room is saying, just trust me. That is not Bitcoin. Bitcoin's blockchain exists so that anyone, anywhere can verify what's true without having to rely on a central authority.
Right.
It's what separates Bitcoin from every fiat system and
Decentralized.
every opaque institution in modern finance. When Saylor dismisses requests for on-chain verification, he's not just making a corporate decision. He's undermining one of the most powerful ideas behind Bitcoin itself, that transparency builds trust and verification replaces blind faith. Now, let's be real. There may be strategic reasons why MicroStrategy wants to keep its wallet structure private. Flexibility in treasury operations, security concerns, fair enough. But you can't have it both ways. You can't preach about Bitcoin's radical transparency while running your Bitcoin reserves like a black box. And yet, this opacity has only made Master more attractive to certain investors because they don't want to deal with custody or verification or wallets. They just want exposure. They just want price speculation. And Master gives them that without any of the responsibility. Users on X like Pius Springer have pointed out how this contradicts everything Bitcoin stands for. And they're right. When one of the largest corporate holders of Bitcoin refuses to follow the very standards that give Bitcoin its legitimacy, it erodes confidence, point blank. Maybe not for the stock market, but definitely, and it should, for the people who actually care about Bitcoin's core values. And remember, transparency isn't just ideological, it's protective. It keeps institutions honest. And when the next downturn comes or the next scandal breaks, the companies that opted out of verification will be the ones facing the most scrutiny.
And see why I kind of don't want to invest into MicroStrategy anymore, the stock. Even though it's going to go up if they continue to do that whole 42-42 thing.
Now, to really understand why Saylor's refusal to offer proof of reserves is so concerning.
But they'll also have to pay for the debt that they're accumulating. See, I'm just saving Bitcoin. I'm not accumulating debt by doing it.
We need to look at the broader
taking
context.
debt away.
The collapse of platforms like FTX, Celsius, BlockFi, Voyager Digital wasn't just devastating for users. It was a turning point. These failures highlighted the dangers of opaque custodial systems, and they pushed the crypto industry to adopt more transparent standards. That's why many centralized exchanges now provide proof of reserves using Merkle trees. Merkle trees are a cryptographic
This is the first time I ever heard of these, actually, by the way, when I watched this earlier.
Tool that allows verification of large data sets without revealing sensitive details.
So see, look, you can easily do stuff in a manner where you can show transparency without giving away sensitive data.
In Bitcoin's case, they allow institutions to prove that they hold certain balances without exposing wallet addresses or creating security risks. It's a trustless, verifiable way to prove you have the Bitcoin that you claim. Exchanges like Binance and Kraken have adopted this approach, and we're not seeing any security breaches there, are we? They allow users to verify their own balances are included in the total reserves without disclosing all wallet information. That's the kind of innovation that honors Bitcoin's ethos.
Exactly. And then, therefore, you can become more trusted. Look, I'm telling you right now, oh my goodness, there's so many things, bro. Another big thing that happened between Epic Games, Epic, the gaming company, and Apple just changed the gaming community and everything about it. Like, there's so much there's so much information to go over. And, like, you know what I'm saying? Like, I do all this for free, so I don't have the ability. Like, let's just say I'm working on being able to streamline a bunch of things so I don't have to think about them, so I can focus on creating content. But the majority of my space is built on real life still. Like, I don't have time to do everything, you know what I'm saying? Because I have to micromanage everything myself instead of being able to distribute things.
Don't trust, verify. And yet Saylor despite having over 500,000 Bitcoin under MicroStrategy's control, has chosen not to pursue this. He says it's a security issue, but let's be honest. Coinbase custody, if we're really concerned about security, it handles a portion of Strategy's Bitcoin, is already a known honeypot. The most recent estimates from late 2023 suggest Coinbase custody may secure between 500,000 and 1.5.
And look how much that is, bro. Yeah, I think that's hundreds, thousands, millions, billions. $139 billion.
Million Bitcoin. That's 6 to 9% of Bitcoin's circulating supply. It's no secret. So if the real concern really is security, we need to ask, security for who? Because right now, MicroStrategy's setup requires trust in multiple centralized entities. Coinbase, Fidelity, the SEC, internal accounting. You have to believe that Strategy is actually buying Bitcoin when they announce it, that they're reporting their holdings accurately, that regulators will catch any discrepancies, even though the SEC is provably corrupt, that their custodians can secure these funds during volatile markets, and that Saylor won't be forced to sell Bitcoin to meet obligations during a downturn. That's a lot of trust for a company that claims to be representing a trustless asset. And that's the contradiction at the heart of this whole narrative. Saylor wants to portray himself as Bitcoin's champion, but in reality, he's positioned himself squarely between you and the asset. He wants you to believe that you need him, that self-custody is dangerous, that Bitcoin ownership
Self-custody is the only way to go.
Ownership is too complex, and that MicroStrategy is your best bet for exposure. But let's be clear, anyone who understands Bitcoin's history knows better. You really should. Self-custody is not a luxury. That's the point. It's the safeguard that protects users from collapses like Mt. Gox, Cryptsy, Cryptopia, Quadriga FTX, the list goes on. It's the only reason Bitcoin still has credibility after 15 years of failed intermediaries. And the deeper you look at MicroStrategy's structure, the more it resembles the same broken system Bitcoin was designed to replace.
Right.
Saylor doesn't want decentralization. He wants control. He's not advocating for your sovereignty. He's advocating for your dependence on his company. And if he were honest about that, maybe it would be fine. But he is not. He's selling a dream of financial independence while building a system of financial centralization. He's wearing the uniform of a Bitcoiner while pushing the incentives of a corporate executive. And for those who bought into the image, I hope you've hedged your bets, because history has already taught us what happens when charismatic leaders start saying, trust me, in an ecosystem that was built to eliminate trust.
And see, this is why I say the only thing I know is nothing. That's it. The only thing I know is nothing. Don't trust me. Do your own research. Always seek multiple angles of perception and perspective before gaining any sense of an opinion. And then you have to go even further to be able to figure out the truth that goes for everyone. Like, you can't just root yourself in a few concepts from a few angles and get the truth. You have to do hundreds of angles.
Entirely.
As many angles as is necessary until it becomes apparent that it's the truth for everyone. See, that's how many angles.
Bitcoin doesn't need a hero. I'm going to say it again. Bitcoin does not need a hero. It needs users who
straight up
who understand it. And if you're looking for real security, real ownership, and real sovereignty, you're not going to find it through a publicly traded company with Wall Street obligations. I'm going to close with one of the most important parts of this entire discussion, how Saylor has reframed the very purpose of Bitcoin. He spent the last few years positioning Bitcoin as a corporate treasury asset. He wants companies, not individuals, to hold it on their balance sheets and treat it like a reserve currency. Strategy now holds over 576 36,000 Bitcoin, and with his so-called 4242 plan, he aims to raise another $84 billion in capital, again, half of that through debt, half through equity, and use it to buy even more Bitcoin. Now let's pause for a second. Bitcoin wasn't created for corporations. It wasn't built to strengthen balance sheets or optimize stock valuations. It was designed as peer-to-peer money, a tool for individual empowerment, a defense against monetary debasement and systemic control. Saylor's
Which we've
strategy
been in
flips
your
that
whole
on its
lives.
head. By
You see what
turning
I'm saying?
Bitcoin into a corporate asset class, he's effectively shifting the spotlight away from you, the individual user, and toward large institutions, ETFs, and investment funds. And it's working. Master's market cap has hit $117 billion by May 2025. Institutions are pouring in. ETFs are chasing exposure. The media keeps calling MicroStrategy.
And that's why Vanguard has been secretly buying a shit ton of MicroStrategy stock. Do you see what I mean? BlackRock is a controller. You don't want that. You see what I'm saying? You don't want to be controlled by them. You got to comprehend, most of the world's going to stay stuck in that corporate ideology bullshit. Do you see what I'm saying? And because of that, they're going to have to go to like BlackRock, MicroStrategy to be able to get Bitcoin.
Strategy a Bitcoin play, but none of that brings us closer to Bitcoin's original mission. In fact, it does the opposite. It rewires Bitcoin to behave like any other financial instrument, bought, sold, and held through Wall Street's preferred channels. It removes the self-sovereign utility, the permissionless access, and replaces it with layers of middlemen and regulatory control. Some defenders of Saylor's strategy, like Punter Jeff on X, argue that he's actually helping Bitcoin. They say securitizing Bitcoin through traditional finance brings in capital, boosts the price, and makes the network stronger. But here is the huge fallacy in that thinking. Buying master stock doesn't help the Bitcoin network. It does not increase decentralization. It does not validate blocks, secure the chain, or grow the ecosystem of peer-to-peer use. It simply helps MicroStrategy's valuation. You do not get access to the network. You don't experience Bitcoin as borderless or permissionless money. You get exposure to the price, and only on someone else's terms. At best, that's a detour. At worst, it's a deliberate distraction from the type of financial freedom Bitcoin actually makes possible. And that's why I'm making this video. Not to hate on Saylor. I know there's going to be plenty of you arguing that point. Not to stir up drama, but because Toby and I have been here for well over a decade. And we've watched what happens when people put blind faith in so-called crypto heroes. Some of the biggest implosions in this space came from the loudest, most charismatic leaders. And in every single case, Celsius, FTX, Terra, BlockFi, there were red flags. But
I see how many of those. That's a lot, bro. I didn't even know how those existed, but they don't anymore.
too many people ignored them. They trusted the brand, the narrative, the personality, and they got wrecked.
And don't
That's
trust
what
that.
this video is really about. It's not about picking sides. It's about helping you see the patterns, helping you recognize when
And I'm helping her help you by reacting to this video. So like and subscribe.
someone is using Bitcoin's ethos to build their own empire, and when they're encouraging you to trust them instead of trusting the code. So if you've made it this far, I just want to say, don't give up on the mission. Bitcoin is still one of the most powerful tools for fighting.
All right, so look, I subscribe to her. Go give her a like. That would be amazing for her. She's way bigger than me. So my 1 or 2 likes for her helps a whole lot, right? Anyways,